So, hey everybody, G Kelly Dixon here. I wanted to talk about really the mortgage boom. Mortgage companies are doing extremely well right now. I talk to a lot of them all the time. They are smiling. They are extremely happy. So here's why. Since this pandemic started, we could talk about April all the way through July. They've written $1.1 trillion in business. That is a huge number, and obviously mortgage brokers get paid for points. That is an excellent number. So why are they smiling, and why is everybody getting loans? It's a refinance boom. Why is everybody refinancing? Because money is very cheap right now and interest rates are extremely low. If you own assets, you really have to look at the debt that you have on those assets and see, is there a way to actually lower your payment? So there are people literally lowering their mortgage payment by $500 a month just by doing a quick refinance, and that's a very good situation for them. It gives really them a better position, and those are very smart plays when money is this cheap. Now, the thing that you have to be worried about is when you're buying into a market like this, and you're buying and you're looking at this $700,000 property, and you're looking at the mortgage payment, and you say, great, I can afford that. Yes, you can. But why can you afford a $700,000 property? Because you can borrow money at very cheap. So the question is, in the short run, interest rates should remain low. But what happens if interest rates do go back up to normal? Even though this is not necessarily new normal, right? We can either go negative or we can go up. So I'm hoping that we go up, believe it or not. We can only go negative if this thing is going to go any lower. But interest rates will probably go up at some point. And as they go up, it's going to put downward pressure on housing prices. So you're buying into a situation and you're willing to pay that much because the interest rates are low. If the interest rates were higher, you'd be willing to pay less, which means that a part of our valuation of how we're evaluating property is due to low interest rates. And we're saying that low interest rate is putting an extra premium on housing prices, which gives the feel that housing prices are going up. But the intrinsic value, the supply and demand, is really what I look at. And again, demand is there and inventory is not there as much. But you want to be careful if you're buying like that, even though you can afford the payment. If you're going to live there 30 years, then what I'm saying has absolutely means nothing to you. But if you're the average person, you plan to live in your property for 7 to 10 years, you may want to pay attention to this because you're going to eventually have to sell, and that market is going to need to be there. If you're depending how much you overpay, you may not be able to recoup all of that when you go to sell. And the only reason you should be owning a house in the first place is equity. Because other than that, it's a lot cheaper to rent. If you're not building any equity, then as a renter, you don't have the repairs. You don't have, all the nuances of housing, fixing the houses and dealing with the violations and all that other stuff. And in this market, you really don't even have the obligation of paying rent. But that's another video. We're not gonna go there right now. But the purpose of owning is equity. And if you say that you want to own, you want to make sure that you are building equity. And if you're somebody that's like, I got a 7 to 10 year window and I'll probably move on or look to buy another house, you want to make sure that you're able to sell your property and make a profit. Because if you can't sell your property, or you're asking a bank to take less than what you owe them, there may be some credit implications of that, and that would affect you negatively into moving into your new property. So you just want to be cognizant of that. If you do have a home and you have a high rate, take advantage of the rates right now. They're beautiful, and which is really pushing the this kind of mortgage boom. But another interesting thing that you may want to pay attention to. It's funny that we always seem to have a mortgage boom right before a real estate bust. I wonder if this is a bubble. Been watching these videos, you probably understand how I feel. I think it is. But hey, you know who has the pump? The Federal Reserve. And the question is, as the bubble gets bigger, do they go psh, 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 or do they let it pop? To give this analogy, the economy is a big bubble. The coronavirus just put a pin in there, and the question is, that pin is pulling air out of the bubble. The question is, will the Fed keep pumping so that there's more air going into the bubble than air coming out? or will they let the pump slow down the pump and the air will eventually come out faster than the air that's going in? I don't know the answer to that, but I am paying attention, as should you. We'll see where we are next year. Until then, G Kelly Dixon, Englestorm Real Estate Venture Partner.